Hey everybody, good morning. It's Tony. I wanted to talk about the SPX, the S&P 500. I'll probably make another video later today, or probably right after this one, talking about Bitcoin and Ethereum, and what happened to that massive drop, as well as where we are right now. So this would be essentially the Big Short Part 3. And things are playing out, almost to the T, unfortunately, right? As of right now, I mean, you do have, actually, even when we go to the daily, as of right now, things are starting to play out. I think the last video that I made is basically I did end up selling everything. I am holding 420 SPY puts for November, and 420 SPY puts for October, and 430 SPY puts for November. I also bought a lot of Mara. I think it's called Mara, which is a Bitcoin miner. I bought a lot of puts on Mara for, I think, October as well. October, November, I don't remember, for $15. So for the most part, they're all in the money now. Well, not in the money, but they're all profitable. I more than likely will buy more this upcoming week, because I think this is just the beginning. As of right now, we have, technically, this trend on the SPX that's been going on since July 14th. If you readjusted it for the highest wick right here, for the highest wick low, or the lowest wick low, if you readjusted it, right, you're still breaking this on the 4 hour, which is usually one of my confluences, or one of my triggers, to actually take specific trades, right? So again, even if you readjust this to the lowest wick, right, the lowest wick low that we had on August 9th, you still broke this easily, right? Still broke this easily. What's actually supposed to do on trend is you're supposed to use this wick low right there, right, which is essentially the very first wick low that you have on the trend. So technically, you actually broke out of this quite a while ago, right? You broke out of this on August 17th officially, right, which is, I think, Wednesday. You came back, retested. This is probably the retest right here, and then you dropped. And I think as of right now, we are headed to 420. And not only that, I do think as of right now, 420 is going to be hit, and I do think there's a really strong chance that we drop even further, all the way to $400. So as of right now, first target is 420, which I think is more than likely going to happen this upcoming week, and then the next drop is going to happen to $400, which is probably going to be the weekend within 3 weeks or so, which is what I think is going to happen. And I think it's just going to be that's just how it's going to be right now, especially because we have the week. On the weekly, we have extremely poor momentum, right? You did not break that trend. You wicked up, and more than likely in the next week or two, you are going to be creating a bear week on the SPX 500. And again, you get these indicators when you join my Patreon, right? That's all in my Patreon, right? What happened last time? These were essentially triggered, right? Last time it was right here. Last time that they were triggered were right here, April 18th, right? April 18th, boom, all the way down. Last time they were triggered, right? January 3rd, the week up, boom, all the way down. So again, you're getting really close, and it's getting really close to what happened last time, right? If you would have taken the trade here, you would have taken the trade like 3 weeks after we hit peak, right? So essentially, I think we get triggered. We close a bear on the week, like late August. I think we close a bear week on late August. But by late August, I think we're already going to be back at like $400, right? That's what I think. And even the DXY, look at that. We closed the bullish week on DXY, right? On average, right? Whenever you close a bullish week on DXY, you run up one more, right? So you actually close a bullish week here on that red trigger, on the red bubble. Next week, you popped, right? Same thing happened here, right? Same thing here. Close the bullish week right here. Let's do this one because it's like a random one. Close the bullish week, right? Obviously, you came down, but then you kept going up. Again here, bullish week, up. And it just does the same thing for every single time. And again, it bounced perfectly off those, it basically bounced perfectly off of trend. And I think as of right now, unfortunately, the DXY target, when was the last time it hit trend? Let me see if I can do this. I apologize for my sounds. I am in the bathroom right now. DXY right now, target would be like more than likely 111, 112. I think that's where we're probably headed right now. It just seems very likely, even on the fibs, right? We'll do the fibs. Yeah, 112 seems to be the target for the dollar. Give me a second. Perfect representation of where the market is going. And if you want a cleaner shot of this, even for US 30, right? Cleaner shot on the weekly for US 30, you know, you didn't break trend, right? You did go above on the daily, right? You went above on the daily. You created a bullish candle perfectly, right? This would have been a perfect entry right here, but you would have gotten stopped because you came back down under trend, right? But again, you did not close above this trend, right? You did not close above trend. You wicked above there on a bear candle, and as of right now, this is where more than likely where we're headed. You have another 22% drop. And the S&P500, right? Same thing. I'll show you guys exactly, you know, where next. Let's look. Like, watch. If we do the forecast for here, right? We'll do this yellow wick right here, because I don't like using bullish candles, right? So if we do that, boom, right? If we were to take the trade here, right? If we traded divergence, right? And we were to take the trade right here, like in that trend touch area, right? Our target would have been, you know, a 395, 386, and 372 SPY, right? That would have been target. And to make this even clearer for you guys, let me change this color to something that we could see very easily. We'll go with red, right? We'll go with red. You know, target would have been either one of these fib extensions, right? It would have been either one of these fib extensions. And there you go. And what would have happened, right? So you would have gone back. You would have seen where there was the most market structure. In any case, I think the most market structure would have been here. It seems like the most market structure would have been here at 386, right? So your target would have stayed 386 on that previous trend touch, and guess what? It would have hit. You would have taken this down all the way to 386, which is right like here. You would have taken this right here to 386. Whoops. 386. You would have taken this right here, 386. You would have gone out. It would have jumped all the way back up here, probably retested on this former level, and then dropped all the way down. So you would have been able to, you would have gone out at the bottom, right? And essentially what's happening right now is you're doing that same thing, right? And unfortunately, if this actually plays out the way it's supposed to, right, there's a very, very, very clear market structure that I'm seeing, right? So we run this up here, run this there, do the same thing for your target, right? You have 337, 323, and 302, right? Actually, let me see if these, yeah, that's pretty good. So again, where here do you have the most structure, right? Like where is the most structure? I did this with, what is it called? I already did this with the US 30. US 30, we had the lowest of the low for market structure, right? But again, for the SPX, you have a lot of market structure at the very low point, right? You have market structure here, 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 but you also have market structure here in the middle point, which is 323. You have surprisingly very little. I mean, you have a major market structure right here at the highs of 336, right? But we're looking for the most instances of market structure, right? And it seems like it might be 323. So as of right now, you know, you're looking at target of a 323, 325 SPY, somewhere around that range from here. You know, that's essentially another 23% drop, right? It would be a 23% drop from where we are now, or if we run it from the highs, this would be a 32% drop, which is roughly in the area of what regular bear markets are, right? Between 30, maybe 40% drop. A really heavy drop, like heavy recession, horrible, would be 40, 50, 60% drop. But a 35, 30% drop is roughly the average bear market, like bottom or so, right? So as of right now, it looks like it's perfectly playing out. You on the weekly on the SPX, you didn't break. You didn't break to the upside, and I actually do think that within the next, I don't know, that's 77 days or so, from what I told you guys last time. So trend touch, and then you hit lows in 49 days, right? Again, trend touch right there, and then you hit lows. Actually, we'll do this one in 49 days. So I'll do the same thing. I mean, I generally like to be on the safe side, but it seems like right here, it seems like within the next 50 days, 20, 30, 40, 49 days, very high chance that you drop to either here, so by October 3rd, whoops, or there. I would more than likely try to play it on the safer side. Whoa, sorry. I would more than likely try to take this on the safer side and maybe get a little bit out. Maybe not 49 days, maybe, I don't know, 57 days, 60 days out, just to be on the safe side. So what's today, August 20th? I'd try to get maybe late October, maybe early November, to be able to play this, the very, very safe side. But I think late October would be perfectly fine to get in on puts for the S&P. At least that's what I think, right? I'm going to be adding more, but this is where I think the market is going in the next 50 days. I think we're going to go back to either 365 or so, which was the low, or we're going to go all the way down to 323, 325. I'll see you guys later. Bye bye.